Thanks for joining us, folks. We appreciate you guys spending your noon hour with us. Uh, we promised to keep this about 30 minutes in duration, so we'll do our best. We're going to have some Q&A at the end of it too, so hopefully we can get around to some comments and questions from some of the listeners. So ultimately today, what we're looking to do is provide some information that we've gathered from a few of our sources and pass it along to you. Hopefully, the intention is you're going to see something here that you haven't come across and something that you can leverage either with your own business or perhaps even with some of your customers. So here are some tips to help you manage your business during these uncertain times. So just to kick things off, just who we are and what we do. We're a boutique merger and acquisitions firm with offices in Niagara and Ancaster. Most of our work is done throughout Ontario and the GTA Toronto region as well. Our niche is really small to medium sized businesses, and that's really what this conversation is tailored toward, is reaching out to entrepreneurs and those who support entrepreneurs and sharing some information as to what we see in this space, which we call the lower mid market. At the end of the day, our role is really helping people sell their businesses, prepare for the sale, stay in touch with folks who are looking to sell down the road, provide some insight as to what we see. We also work with buyers. We help them identify what a good fit may be and match them with potential sellers. But at the end of the day, I would say we're much more than just the M&A practitioner. We like to look at ourselves as someone who's passionate about business, someone who likes to collaborate with other business leaders in this space. So without further ado, let's jump into this and let me share some of the information that we've compiled. So today at the end of this, hopefully you're going to get something valuable. I promise is a corona-free, positive vibe type message. It's not too doom and gloom. I'm sure if you're watching Fox or you turn the TV on these days, you're going to see a lot of different images and statistics, and if you're glued to the television, you're probably pulling out your hair. It is just downright depressing. This is an interesting time we're living in. And even as I put this information together, I can't believe how quickly things have changed. I ended up updating this presentation last night and this morning just because statistics have changed so quickly. So at the end of the day, I want to provide some facts that you can use to drive some solid decision making, offer some practical tips so you can navigate through this time of uncertainty. And we've got some links too that you may want to check out. For the most part, we've leveraged information from the BDC and the Conference Board of Canada. We've looked at some of the other national accounting firms to see what they've put out. There's a lot of good information out there. You'll find that some of it is a little bit different in terms of how they forecast, but to be honest with you, the overall message is relatively consistent. At the end of the day, we can provide you with the information, but really it's up to you to put it to good use. So we got a little quote here saying, knowing is not enough, we must apply. Willing is not enough, we must do. So the ball's in your court after this session. What you want to do with this, it's really up to you. So that's why we're here today. It's this funny looking element, which we all know what this is. 3 months ago, I'd be interested to know if anyone would even know what we're looking at here. It's unreal in terms of what a virus can do to not only a country, but an entire globe at the end of the day. It's just mind boggling what sort of initiatives and changes have taken place over the last couple of months. So the general topics that I want to touch on today is what does it mean for Canadian businesses, specifically those in the lower market. Um, the factors are a little bit different for publicly traded companies. Their support networks are a little bit different. I'm talking specifically about those businesses that really drive our economy. Secondly, we're going to talk about recovery and the latest economic forecasts. About a week ago, BDC put on a great webinar and they made some predictions. Conference Board of Canada, too, they've been working with Stats Canada. They've put some really interesting forecasts out. I've seen some of the banks now start to forecast. What I would expect to see in the next couple of weeks is a little bit more robust forecast at a provincial level. Haven't seen any of those yet. Some of the banks are now putting stuff out, and I would imagine we're soon going to see a little bit more granularity. The third topic is around continuity planning in the short term. BDC, through one of their webinars, offered some really good practical advice to business owners and how they can weather the storm. And I think it's pretty easy to get caught up in all of the news and quite frankly get shaken. I've had the opportunity to speak to quite a few business owners over these last couple of weeks, and everyone's taking it differently. This continuity planning section really allows you to put the pieces in place, prioritize, and then go through them systematically to ensure that your business is following the necessary steps. Lastly, we're going to be talking about adjusting business practices. So this COVID-19, it really will impact us moving forward. We're not exactly sure how it'll impact us, but we're already seeing changes coming out of China. They're a couple months ahead of us, and I think there's a lot we can learn from what's going on over there. So just going to share some of those items with you. Conference Board of Canada has talked too about how things may be changing long term. So they have some really good insight. And lastly, if those of you want to put forward some questions, happy to take those on at the end of the presentation. So here we go. I mean, it's no surprise that we're expecting to see a huge shock to the system at the end of the day. Canada was trending quite nicely. All of a sudden, the virus comes on board, affects our nation. And if you look at the right part of your screen, if you look at Q2 forecast 2020, we're looking at a reduction in growth of about 11%. Our economy is essentially coming to a grinding halt, and it has had significant impacts. We still don't know how deep this is going to cut. But we're slowly getting more and more information that will help us understand how radical we need to get. So obviously, BDC predicts a recession in 2020. This virus is obviously going to stimulate that recession. A lot of what we see in Canada here is driven by the U.S. economy. It's also driven by the energy sector. And, if you look at some of the oil issues overseas and some of the wars, those obviously affect us as well. So it's something important to keep in mind as we go through the presentation is that our economy is quite unique. It's quite a bit smaller than the United States, but we're very dependent on their economy. So if they recover slowly, it will definitely have an impact on us. Same with oil prices. It's really directly correlated to how our economy does at the end of the day. BDC went out and did a survey, and this was about a week after the coronavirus was declared an emergency here in Canada. And what they found is that there was an immediate impact to Canadian businesses. Almost 3/4 of Canadian businesses said they were negatively impacted. And if you look at Stats Canada, you look at the breakdown of number of businesses, there are numerous small businesses that, work in or support the tourism industry, work in food and beverage, restaurants, bars, and that sort of thing. If you look at practitioners, massage therapists, and this sort of thing, these are the folks who I believe got hit really, really quickly and really hard. And unfortunately, a lot of these folks, recovery on their end in their particular industry is likely going to be slower than some of the other ones. Interestingly, 1% of Canadian businesses are actually positively impacted. If you look at convenience stores that are still open, if you look at grocery chains, you look at those manufacturing candy, maybe backyard equipment for the children, they're seeing an impact. They're really ensuring that the supply chains in good condition. They can continue to get product to households. Less people are eating out, more people ordering groceries. So obviously the grocery chains are expected to see a bit of an uptick here. So a weekend, 25% of Canadian businesses said they were not yet impacted. I would imagine if BDC redid the survey, there would be many more Canadian businesses that are impacted. I know Ford had mentioned yesterday that they're reevaluating the essential services and businesses that should remain open. I haven't seen anything yet, but if that list shortens, I imagine it'll have a direct impact on the businesses that are impacted. What it boils down to from all the research I've seen is that, the impact really will depend on the industry. If you're classified as an essential business, obviously it's going to have less of an impact. If you're tied closely to some other countries in terms of your supply chain, ordering products, this sort of thing, obviously, there are other contingent factors that you have to be cognizant of. So, it really is industry specific. Haven't seen too much information on specific industries, but I think it's pretty straightforward in terms of what we can expect to see based on the service, the product and service one provides. So Conference Board of Canada, and this would have been about a week and a half ago, put out an excellent report, and it was entitled Social Distancing and the Impact on the Canadian Economy. And their assumptions put forward in their models are quite interesting and rather conservative. They essentially said that there'll be a travel ban in place until end of August, and this includes both in US and Canada. We haven't seen the bottom yet. It is going to get worse. They've essentially looked at what has happened in China, and that's how they created their baseline model. Overall, in 2020, they now predict that we will contract as an economy by about 1%. We had seen some growth first couple of quarters, and obviously in the table before you saw that decrease of 11% in Q2, and that is going to hit us the hardest. Unemployment, they predict, is going to go up to 7.7%. The Chinese, they hit over 6%. Some indications that the numbers may not be accurate. They may be closer to 10%, but needless to say, unemployment rates are anticipated to go up. I imagine for sure they've gone up since this report has been put out. The businesses hit the hardest are those household services businesses, the ones touching the resource sector, as well as those touching tourism. People aren't traveling, staying in hotels, obviously. No one is going to restaurants and sitting down or ordering a meal. These are the businesses that have, as I mentioned earlier, taken an immediate impact. And these declines are significant. They expect to see these businesses really weather the storm, or some of them will remain closed until September, until some of the bans lift. The other huge piece that really factored into Conference Board of Canada projections is really what's going on in the US. And the US is really right now fighting this virus. And we've seen significant impacts in New York. And given their economy, and given what they can really accept in terms of products and services from Canada, it's going to have an impact on our economy. 75% of our goods and services go to the US. If they're in a state of emergency or crisis, very unlikely that they're going to be accepting products. So that's going to have an impact here, even if we can control the virus and things get under back to normal. So at the end of the day, I mean, to really sum it up, industry servicing, tourism, household services, and resource sector construction will be hit hard. Some of the other things that they predict is the global growth is also going to impact commodity prices. This is going to affect our economy as well. Obviously, we spoke about US and how connected we are to them. Globally too, it will impact. I mean, if you look at globalization, you look at folks who outsource a lot of manufacturing and look to outsource some of the items where they can get cheaper labor, even some services. Much of this is going to change, and that is really going to change the way in which we do business. Thankfully, the government of Canada has stepped up to the plate. They put some stimulus packages in place. They were looking at China to see what China did, and the Chinese were quite aggressive as well. Canadian government also lowered the interest rates, and we saw in the market that had a pretty immediate impact, and it boosted some consumer confidence. All of this really what the government is trying to do is ensure that any preventable personal and corporate bankruptcies, are eliminated. If they can keep businesses afloat, it'll be much better for the economy. So a lot of these initiatives are really tailored toward that. One of the things I came across yesterday from a banker was, RBC is obviously one of the larger banks. They're distributing some of the stimulus packages, such as emergency funding. But at the end of the day, they're still not going to be writing bad loans. They're going to make sure that the money that goes out is helping businesses who are in good shape and can remain in good shape moving forward. So something to keep in mind, distressed businesses will likely take a hard hit. What we've seen in other downturns, if you think about Alberta and the oil patch, a lot of those businesses, even with some support, some government initiatives in place at the provincial and federal level, many of those weren't able to survive. Oftentimes they'd hang on for 2, 3, 4 months, but when you get to months 7, 8, and 9, with limited revenue, the balance sheet is just not strong enough to sustain the business. And I would expect that we're going to see the same thing here, both at a personal level. I think from a financial standpoint, there's going to be some personal bankruptcies, and there's going to be an uptick in some corporate bankruptcies. Interestingly, on the real estate piece, I don't think it's a surprise that the market's going to cool off. However, what Conference Board of Canada put forward is that they do anticipate that housing starts are going to continue to be quite strong through 2020. Now, obviously, this could be hampered if Ford decides to shut down construction. I know some specific companies in the Toronto area who haven't been adhering to the health regulations. For example, folks working in very close proximity to one another. Some of those companies have been shut down. I haven't heard anything further about any other construction sectors being shut down. But as it stands right now, I would expect housing to continue to be strong in certain areas. And the long-term impact, I think, will be positive, especially with the lower interest rates. They do predict that folks are still going to be looking to purchase houses after some of this craze goes away. Another piece that I found interesting in their report, and it's not really a surprise, and to a certain degree, it's probably a good thing. But Canadian banks will be in very good condition after all of this is said and done. They're helping with with distributing some of the relief efforts, the emergency funds, communicating the wage subsidies. They're doing a lot of firefighting right now, and they obviously play a critical role in our economy. But from a profitability standpoint, it's quite rare that we see some of our top chartered banks lose money, and I think it'll be no different here through this through the next 3-4 quarters. Their money be put to good use. They're going to be writing good loans, and I imagine that they'll ensure that their buckets are balanced in such a way that shareholders are still making a decent dividend. The table on the right is some more detail-based information. It has a comparison of the Canadian and the US GDP dollars, and you can see where 2020 lands. If you look at the before and after picture, it's quite different. It's mind-boggling how quickly something can change within a matter of months. So going back to the government response here in Canada, I think a lot of folks have praised the government. Bloomberg, in fact, has said, you know what, this is going to be the largest government intervention that we've seen related to the economy since World War II. And there's a lot to be said about that. What we're dealing with is significantly larger than the downturn that we saw in 2009. One of the questions that a lot of folks have asked, and something that I've looked into, is can we afford to do this from a Canadian or government perspective? Can we afford to be offering these packages? We're talking about measures that are near $1 trillion over the course of the entire crisis. Is this sustainable? Is this something that Canada can afford to do? BDC put a really interesting chart out, and they essentially said, if you look at all the G7 nations, you will see that Canada is in really good shape compared to some of our other neighbors. In fact, from a debt load as a percentage of GDP, we're probably in the best condition compared to the other nations. So, good to know that Canada can afford to do this. One of the things BDC did touch on, though, is this measure needs to be taken care of quickly. We can't sustain a long-term economic shock, so best to try to get the economy back in order sooner than later. The other piece, too, that I found interesting is that we're really suffering two shocks simultaneously. We've had the unemployment rate double extremely quickly over the course of a couple of weeks with the closures of businesses, and then secondly, the oil price has just plummeted to levels we've never seen before, and it's really devastated the energy sector. The other piece that the government is looking to do is buy up some of the Canadian mortgages. They've forecast this will be about $115 billion worth. So you can see the government is quick to respond. It's not only putting money out there, it's changing some of the legislation. So far, the news that I've seen has been pretty positive around what the government has done. So switching gears to recovery in the latest forecast, I mean, when you think about a forecast, it's only as good as the data being used. It is very hard to pinpoint the exact timeline. We have a lot of data we can go off of. We've got great modeling out there. There's some pretty smart people in some of the larger corporations, especially, who are putting out numbers now, and it's really interesting to see what people are saying. Conference Board of Canada and BDC really came and put a forecast forward that was very similar. I'm not sure if the forecast would be modified based on what they're seeing today. I mean, we're about a week past the publication date, Essentially, what the reports indicated is they're using China as a baseline. If you look at the table to the right, you can see how they were affected a couple of months sooner. They're essentially 2 months ahead of us. We can look to China to see what they've done, what measures were put in place, and how they responded and react as an economy. And that's what Conference Board of Canada and BDC did when building their forecasts. Some of the assumptions that they would have put in place is the length of self-isolation. Also looking at some of the other catastrophes that have taken place, maybe not necessarily globally, but even on a national level, and then looking at consumer behavior, seeing how people respond. All of that can be factored into these models. Lastly, using the stock market as an indicator is also pretty valuable. You can see consumer confidence levels in the market. You can see whether or not people are pulling their money out or they're comfortable with some of the initiatives the government put forward, such as lowering the interest rate. You will see a bit of an uptick. So those are a few things to watch and pay attention to when you're looking at the forecasts. So what do we learn from China? We know, again, they're 2 months ahead of Canada in dealing with the virus. We know that the retail sales really took a hit. Industrial output took a hit as well. They were down 14%, and their unemployment rate hit levels above 6%. What we do know 2 months into this catastrophe, that 95% of the large businesses are up and running. Now, how dependent are they on the US and some of the other nations? Probably not similar to the Canadian situation, but for the most part, it's pretty impressive to know that 95% of their larger organizations are back up and operational. 60% are now operating. Now, these are the small to medium-sized enterprise, which I would consider those in the lower mid-market. They're still obviously being very precautionary in China. They've seen some new or some cases relating to folks coming back to China. So they're obviously very, very cautious about the virus. It's not fully behind them. And the government too now is trying to kickstart the economy. The virus has really push this into a recession. Now the government's mandate is really to figure out how they can get things moving again. And interestingly, a lot of their products get shipped overseas. So how receptive folks are to recovering will ultimately dictate how quickly their economy kicks back into gear. Overall, though, consumer confidence is up. Folks are now spending more money online. There's some discretionary spending, and folks are even visiting some restaurants. So that's kind of a view of what's going on in China. In terms of recovery, BDC had a couple of models. They really believe that the first scenario is the most accurate. The first one basically says, hey, there's going to be a short-term shock to the system. It's going to be severe, and then there's going to be a recovery. The second and more interesting one is really a more long-term, prolonged recession. And this is the dangerous type of recession that can really hurt a country because, as I mentioned earlier, it's sustaining this shock for a prolonged period of times that really can do a country in. Essentially, the second long-term recession, what that scenario refers to is, given that there's going to be global impact at differing levels, so different countries experience different levels of crisis. If you look at Italy, obviously, they're in extreme crisis mode. Germany probably on the other end of the spectrum where, yes, they're being very prudent, but the virus has not affected them in the same way. So this model essentially says, listen, different countries are going to respond differently. Their economies are going to respond differently. And the global economic downturn is going to be longer, and it's going to have a long-term effect on Canada's economy at the end of the day. And Right now, as I mentioned, BDC really believes that the first scenario is likely the more accurate one. Conference Board of Canada, their scenario is very similar to that BDC proposed. There's going to be a short-term economic shock. Overall in 2020, we're going to see a drop by about 1% in GDP growth. They're anticipating that household spending, discretionary spending, in fact, will hold off until about September. So self-isolation likely to occur until end of August. And they expect to see a resurgence in Q4, which carries some momentum right into 2021. So interestingly, they believe that there's going to be a rebound. 2021, they're already predicting some growth of 3.3%. So now to some more of the practical items here. How can you as a business owner really mitigate some of the damage that you've seen? BDC in their seminar really did a good job laying out the steps that one needs to follow. First and foremost, prioritize safety and staff. Health is the most important. Make sure everyone is healthy before you look at step two. Step two is really around stabilization. Cash flow planning is essential to remain solvent for business owners. There's emergency funding available right now. Folks need to be taking advantage of that. They need to make sure that their staff is safe. And interestingly, BDC said, you know what, there might even be some services that businesses can offer to generate some quick cash. The other piece that they suggested is deferring any expenditures. Perhaps there was a capital purchase you were going to make. Now may not be the right time to buy. So doing an evaluation would be prudent. The third part is really, once you have a rough idea of how you're going to manage and weather the storm, continue to monitor, evaluate, and adjust your practices. Keep lines of communication open to staff and customers. Keep your finger on the pulse and make adjustments as necessary. The last step at the end of the day is really preparing for recovery. Update your financial plan. Make sure you have a cash forecast. You can inject money into purchases when needed, and just get ready to have staff queued up, have sufficient funds, and make sure that the orders are going to be there as soon as the recovery takes place. And given that we have some rough forecasts, it's probably fair to assume that tail end of Q3 is when we're going to start to see a bit of an uptick, depending on the industry you're in. Last section here is really about some of the things that may be impacted long-term due to the coronavirus. Conference Board of Canada said there will be some long-lasting changes in the way businesses conduct themselves and also how we socialize here in Canada. In China, they're doing more and more consulting online, especially health practitioners. There's also been a lot more online purchases made. So some of the folks who may not have done some online purchases have been really forced to do so, and they're continuing to do so even after some of the stores have opened. Telework may be more broadly embraced as firms learn through this crisis to look to technology for a solution. Companies may be more apt to allowing people to work from home. They're probably going to learn that, hey, things don't fall apart. People can still work remotely. We do have the technology. So that could be another a positive that comes out of this. Some of the other things too is there could just be general productivity upticks in general. And this could be good for the environment, less cars on the road, less congestion, perhaps in some of the larger cities. Lastly, if you think about globalization and the reliance on outsourcing to China and some of these other countries, this may be one of the drawbacks to the virus. If our supply chains are damaged, we're likely going to be more apt to using and configuring our supply chains in our local economy. So something to think about for those manufacturing companies out there. The net impact at the end of the day, and I don't think that this is shocking in any manner. Households, businesses, and government will be in deeper debt due to the crisis, but no one is forecasting a catastrophe. Right now, most folks are having a kind of a level head approach about this, and there will be a higher debt load, but at the end of the day, things will rebound. Here's some practical strategies and share with you what I'm going to be doing as well. Just while I have a little bit more time in self-isolation. Leveraging government incentives. I mean, this is a key piece to take advantage of. Even if you're busy right now and you're an essential business, take a look at what the government has put out. There's a $40,000 emergency loan. A portion of it may not need to be repaid. There's wage subsidies to ensure that you can continue to employ employees at a reduced rate. There's deferral of income tax payments. There's a ton of stuff out there, and now is the time to take advantage of some of that. Be proactive, put a forecast in place, work on your business. All business should be looking at their working capital needs. You want to remain solvent. You don't want to wait until you're in trouble. The support may have dried up by then. So be very forward thinking, get out there, be proactive. This is a good time to do some strat planning, some forecasting, look at what other leaders are doing. I've made a few notes about what folks have done in China already just to adjust their business practices. Look at some of the other leaders around you and see what they're doing. Lastly, keep your finger on the pulse. Don't become complacent. Be reflective, strategic, and action-oriented. Be positive, adhere to the health guidelines, but prepare for the rebound. It's coming, and those who are going to be prepared will really benefit from it at the end of the day. So lastly, Blue Ocean Strategy. This is a book that I read years ago. They've got another expanded version out. I'm going to be reading it again. I really find it opens my mind in terms of what other opportunities are out there. It helps me evaluate the industry I'm in, helps me evaluate, doing things differently, perhaps being innovative. It really does get those creative juices flowing. So if you're bored, not sure what to read, I suggest picking up a copy of this book. And again, the key to all of this, provide you with a lot of information at the end of the day, but really, hopefully you can apply some of this to your business, and hopefully it will benefit you positively in some way. So that sums it up. Sorry, I'm a few minutes over here, but that's essentially the crux of it. We'd be happy to send you the presentation deck. We've also got some helpful links. At this point in time, for those of you who are able to stay and ask a few questions, would be happy to field any questions that you may have. I do want to thank everyone again for joining the webinar. We appreciate it. We're going to be doing another webinar as a follow-up to present our findings on how things have evolved over this crisis. But again, if you have any questions or comments, feel free, visit our website, send us an email. Always happy to chat. Final slide here just shows some of the links. Stay safe. Thanks again, and we look forward to connecting with you soon.